Welcome, everyone. Good morning. We got the chat pulled up there, so you can go ahead and drop a comment in the chat when you tune in. We will wait just a few minutes here to get started. Let everybody have a chance to jump on. Let us go live on all the different platforms. Then we will get into it. Definitely going to be interesting today. As of the last week or two, it's going to continue to be interesting with the rates. So definitely looking forward to seeing what's going on today with the rates. Good morning, everybody. Checking in. Drop a comment there in the chat when you check in. All right. Good morning, everyone. Just waiting a couple minutes to get started here, so hang tight. Hope everybody had a great week. Getting ready to have a good weekend here. All you loan officers out there, make sure you're calling on the weekends. Taryn says DSCR Friday. Yep. It's always DSCR day at the mortgage calculator, right? Every day is a great day for DSCR. Thank you, everyone, for tuning in. Just waiting a couple seconds here to make sure we get live on all the platforms. All right. Looks like we are good to go then. So we can go ahead and take off the chat and we'll go ahead and get into it. Welcome, everyone. My name is Kyle Hiersche. I am the COO of the Mortgage Calculator, joined here by Nick Hiersche, our president, and Jose Gonzalez, our sales manager. We are a correspondent lender that specializes in non-QM loans, especially DSCR loans, debt service coverage ratio loans that go based off the rental income of the property with no income verification from the borrower, no employment verification from the borrower, simply based off the property. So we're going to go into a deep dive on that today. But before we do that, we're going to go over the rates like we do every morning. So every morning we like to pull up the rates for all the different programs and see how they vary from day to day. And I think today is going to be very interesting. There's a lot of movement going on in the market. So we will see what it looks like today. So DSCR loans is the topic for the deep dive today. Jose is going to pull up some specific quotes and get into that later. But before we do that, like we do every day, Nick, why don't you go ahead and pull up our pricing tool and let's check out the actual live mortgage rates for today, which is March 24th, 2023.
All right, thank you, sir. So let me go ahead and switch screens and we will get started. So as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. If you would like a full loan estimate, please let us know. We have over 300 loan officers. We are licensed in 22 different states for primary and second homes, and we're licensed to do our DSCR business purpose loans in about 45 states. So a lot of great opportunities there. This is just going to be our pricing indication with our rates and APR values for today. As Kyle said, it's March 24th, just after 11 a.m. Eastern, so all of our basic programs are live. So we will go through our demo as we do every morning. We'll set a nice easy loan amount of $400,000. We will set the LTV at 80%, 80% loan, 20% down payment. We'll tell the computer to find the best rates at 99 price. That means one discount point of cost. Most of our borrowers are asking to buy down the rate a little bit, so that's typically what we will select. We will do our demo today as we do every day on conforming conventional first. Then we'll go into the FHA program rates. And then we'll pull up our expanded guidelines, aka NonQM, where we have over 5,000 loan programs that use alternative income verification. If you'd like a VA quote, if you're an eligible veteran, please get with us. We can do that as well very quickly. But since not everybody is an eligible veteran, we don't do that live. And same with USDA. Those are only for eligible properties that are in a USDA eligible area. So since not everybody is, we do not do that live as well, but we'd be happy to quote those for you guys. Let's start with our first scenario here, conforming For all of our scenarios, we're going to set up purchase, 30-year fixed standard loan, primary occupancy here for the first few, single family, 1 unit, state of Florida, county Miami-Dade, that's where our office is based. We will always use an estimated FICO of 760 here for our demos and an estimated DTI, debt to income ratio of 40 for our demos here. So let's check out our rates this morning. And rates went back down a little bit. So remember on the last couple shows, they went up, back down here. So we're back into the lowest range we've been in about 6 months here right now. So we're at a 6.49 for 1 discount point in cost. Oh, actually, this one's a little bit better here. 6.49 for 0.75 discount points in cost for a final APR of 6.658. So remember, APR is our annual percentage rate that allows us to compare apples to apples. So we'll highlight that on each of these programs so you compare side by side. So if there's any reason that a customer would not be able to qualify for a conventional loan, typically the next option we always want to pull up so they can compare. We'll pull up the same 80% LTV, and this time we'll check out our FHA rates. Everything else will stay the same as the other scenario. And let's quickly go into our FHA programs. So it looks like the best combo the computer found here. Oh, again, let me scroll down, find this one. 5.5% rate for 0.875 in discount point costs for a final APR of 6.098. So notice the APR actually on the FHA programs is lower. So a great comparison there for our borrowers that may be interested in comparing FHA to conventional. Obviously, FHA is not often that it's a lower APR overall because FHA does require an upfront mortgage insurance and an annual mortgage insurance. However, right now with the changes to the FHA programs, they are very attractive. Definitely recommend. If you're looking at a comparison, look at them side by side. They are very valuable today. Now let's go into our final demo for a primary home. So we'll set up the same scenario. And this time, many times other banks or lenders do not have any other options besides conforming and FHA. But we have over 5,000 other options under expanded guidelines, aka NonQM. So we'll click that option. We'll keep everything else the same. But now we'll notice we have a new box here, income verification. So we can use alternative income methods under these NonQM programs. So full doc means 2 years of tax returns. That's typically what we do for conventional and FHA. So the reason to go to a NonQM program is typically to use alternative income documentation. So for example, we have our 1 year and 2 year alt doc programs. We do a bunch of shows on those. Please check out some of the other episodes. We have our asset related. We did one of those this week as well. We have our business bank statements. We have our DSCR, which we'll go into in a second. And the most popular program by far for a primary home for NonQM is going to be a personal bank statement 12-month program for our self-employed borrowers. That's because typically our self-employed borrowers are going to have various write-offs on their tax returns, and it may pose some challenges for income qualification purposes for debt to income. So in this case, we're going to use 12 months of their bank statements in order to determine a debt to income ratio using their actual cash statements in the bank with various ratios there. And that will allow us to typically qualify most self-employed borrowers for much more monthly income and therefore qualify for a loan where they would not qualify or qualify for more loan amount where they need more loan amount. So these are great tools for our borrowers when they maybe can't quite get there under conforming or FHA guidelines. Let's check out our options here for NonQM today. So looks like the best option the computer found, 7.375 rate for 0.625 discount points and costs for a final APR of 7.410. So remember the APRs on the conventional programs were in the high sixes, and then now we're in the low sevens here for NonQM. So obviously NonQM is always going to be a little bit higher. So if you can qualify for conventional, we'd love to quote that for you. But a lot of times people also want to compare side by side. These are great options. The rate is a little bit higher, but it's not too crazy. We love it when our programs align. You see right now in this market, FHA, conventional, and our non-QM are very reasonable. They're all in the same box. So we love to present these options to our borrowers so they can choose which one may fit best for them. Now, if you notice here, I'll scroll down a little bit. There's dozens and dozens of these programs with bank statements with different names and different flavors, some of them at higher rates. Some of these may allow things such as a foreclosure or a bankruptcy recently. So a lot of flexibility we get not only with the income calculation on these non-QM programs, but with guidelines as well, credit events, things like that. So please get with our team. We'd be happy to walk you through which one of these programs works best for your situation. Now, let's go to our final demos for today. And let's go to investment properties. So we always want to check out our live rates for investment properties. And we'll set up the same scenario, 80% loan to value, 20% down payment. And for an investment property, there's really only two options here. We can go with our conforming conventional options, and we're going to compare those to our expanded guidelines, aka non-QM. Remember, FHA, VA, USDA, not eligible for investments, only for primaries. So very simply, we're going to compare these two options. So we'll select conforming conventional. We'll keep everything else the same as all our other demos, but let's check out our rates for an investment property conventional. So it looks like about the same as it's been recently. Remember, there are additional loan level price adjustments, we call them, basically penalty fees for investment properties to add to the cost here. So fortunately, the computer's not able to find a combination with one discount point in cost. So the best combo APR wise the computer found here was a 6.625 rate for an investment property with 3.5 discount points. You notice that's a lot of money, $14,000 in this example. So a lot of money out of pocket for our investor as far as cash out of pocket. Many times our investors are saying, that's a great rate, but I would like an option with less discount points, less cash out of pocket. So even though this APR is great, 6.885, an investor may choose a higher APR or a higher rate for lower discount points. So you see here, this option might be good to present to an investor, 7.125 for much lower discount points, 2.375. However, we're limited on the conventional programs because of these loan level price adjustments. So our solution to that is we love to present our non-QM options to our borrowers looking for investment properties. A lot of benefits to the non-QM program. So let's go back for our final scenario today. Set it back up to 80%. We'll set it to investment property and expanded guidelines, aka non-QM. So we have our various options. There's two options now we have to set, our income verification. So for investment properties, our most popular option by far is going to be our investor DSCR, which is our topic for today. That stands for debt service coverage ratio. And that is because it doesn't actually require any income verification. No employment verification from the borrower, no income verification from the borrower. We're simply going to use the estimated rental income for the property in order to determine if that estimated rental income could typically cover the payment, the PITIA, for that mortgage. If it covers the payment, that's a DSCR ratio of greater than 1, aka the property cash flows. We have hundreds of programs for properties that cash flow greater than 1, but we even have programs for properties that don't quite cash flow. That would be a DSCR ratio under 1. So you'll see a bunch of different options here that are about to pop up, but please note that we can do all kinds of different variations of this program. Now, the other option we always select here on an investment property under non-QM is our prepayment penalty. The standard is 3 years, so that's what we'll select today. There is an option for zero prepay. It'll obviously cost more, and it will reduce the amount of loan programs that we can choose from, so we don't do that on the demo. And same with 5 years. If we want to save a little bit of money, we can select 5 years, but that does reduce the amount of loan programs available. So for the most options, we're always going to select 3 years. That is standard for these programs. So let's check out the DSCR rates this morning. Wow, back into the sevens, baby. All right, this is what we like to see. So DSCR takes a couple days to change. So with all these recent Fed announcements, you see the conventional and the FHA are going up and down by the second. The DSCR and all these non-QM programs take a minute to react, but they've reacted. This is what we love to see, right? These are amazing rates. For the last 6 months, we've been in the 8s. Now, as of this morning, all the people watching on the team, please requote these. We have some great, amazing options in the 7s here for our average scenario, 7.625 for 0.975 discount points of cost and a final APR of 7.671. So you see there, the APR is almost identical to a conventional loan when you take all the costs into account. So amazing programs right now. You can quote a conventional and a DSCR loan side by side. The investors will always choose the DSCR loan because it's about half the paperwork, about half the time. And one of the beauties of these DSCR loans is for investors that own multiple properties, we can cash out multiple properties and apply for multiple purchases at the same time. There's no employment involved. So you can start 5, 10, 20 loans at the same time under these DSCR programs if you're a heavy investor. One thing to note, if you scroll down here, there are a ton of different options here. As I mentioned, with different DSCR ratios, different prepayment penalty amounts. So we have hundreds of options under this umbrella. Please get with our team. Some of these options may have a little bit higher rates because they may allow things like short-term rental income. So please get with our team. They'll navigate which one of these programs fit best for you. And that is a great segue into our deep dive topic here. So let me pull that up and we'll get into that. Give me 1 second. Let me switch my screen. And our deep dive topic for today is going to be on DSCR loans. That's what we just pulled up. That was an 80 LTV example, pretty simple example. Jose is going to pull up hopefully some examples with some different flavors, as I mentioned, of this program. Maybe he has an example here with short-term rental income, which you'll see maybe have a little bit higher rates, but obviously great options for our borrowers looking for Airbnb type of properties. So a lot of different variations of the DSCR. Remember, that's debt service coverage ratio. So we're simply going to get the estimated rental income on a purchase. We're going to get the appraisal to state the estimated rental income. And we're going to use that to offset the payments of that mortgage, right? Just that one mortgage. We don't have to worry about any other mortgages or any other payments, anything like that. We're just going to say, does this estimated rental income cover, or what is the ratio of this estimated rental income to offset the PITIA, the mortgage payment for this one property? So that is the basics. So let me go ahead and pass it over to Jose, our sales manager, 27-year veteran, who can talk about the ins and outs of these programs, which is our flagship product.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. DSCR is our flagship program. A lot of solutions are available with the DSCR program. DSCR stands for Debt Service Coverage Ratio. It is an actual calculation which takes into consideration the gross rent that is being generated by the property divided by the housing expense. Now, that is where we have multiple opportunities, because it is when we do look for different outside the box ways to be able to determine if the property, what is the actual debt service coverage ratio. It could be short-term rentals. It could be from a lease. It could be from AirDNA, which is short-term rental projections, which would be for a purchase. So what we have put together today here is multiple purchase options and a refinance options, but I am throwing a little twist in there for you all that you will see. So hold up a second here. In our first example that I have, it is for a 1-unit DSCR purchase with 15% down, right? 85% loan to value. Now, very interesting to note that this option only requires a DSCR of 1.0 or above. Is an interesting option because the other options that we had were for 15% down were requiring a DSCR of 1.25 or above. So in this example, we are only required 1.0. So, just keep that in mind. This usually works more for lower valued properties that have a high rent amount. Like, for example, $150,000 property that has $1,800 or $2,000 a month rental, as we do find in a lot of areas throughout the United States. We do have this. I see this situation coming up all the time, and we are disclosing 85% LTV DSCR loans. So that is very attainable. So here, the lowest cost option is 10.875, and the lowest rate option at a cost of about 3.125 points is 9.5%. So now here we have 2-unit DSCR purchase, 80% loan to value. Now you do see rates are substantially better. Lowest cost option, 9.625. Lowest rate option, 7.99. Keep in mind, I am pricing all of these out with a 3-year prepayment penalty. However, a 5-year prepayment penalty is possible and will give you a little bit better pricing, but I'm keeping it uniform here. So now we have a 3-unit property, and you can note that the rates are the same. I didn't select all the rates. I just basically selected them, other than the first one, which is the lowest cost option, in increments of 0.25% in rate. But the rates are exactly the same for the 3-unit as the 2-unit on the purchase. And now I have here a 4-unit, and you can see again, same cost. It's very important, that you take this into consideration, that we don't make any assumptions when we are sizing up our deals. We always have to try to uncover every opportunity out there, because you never know what you will find. So now here's the interesting twist that I threw in here for all of you. Mind blower. 5 to 8 unit DSCR purchase, right? This is for a 5 to 8 unit residential type property, not the mixed use option. However, we can do the 2 to 8 unit option for a little bit more cost, but the same rates. But here, our 5 to 8 unit, you will note an 8% interest rate is only costing $1,950 in buy down. That is correct. This is a better rate than what you will find on our regular 1 to 4 unit properties. And you ask, how is that so? Well, that's because the mortgage calculator uncovers all opportunities out there in the market. We're not assuming anything. We are looking for the solutions. And here we have the amazing solution for a 5 to 8 unit property. This is one of our specializations, right? The 5 to 8 unit. We love this product. A lot of lenders out there have no idea what this is. At the Mortgage Calculator, we totally embrace this product. And now I'll just show you a refi option here, just so that you know that the highest loan to value possible for a DSCR cash out refinance is 75% loan to value. So pretty good rates here, 8.375. Actually, very good rates here, 8.375. Only costing $12.66. I mean, that's like 0.3, more or less around there, right? And 7.375 being the lowest cost option, costing about 3.25. So these are very good options for a cash out refinance on a DSCR loan. So again, we really love the DSCR. We have, I believe, was probably the best selection in the industry of DSCR options out there: 1 unit, 2 unit, 3 unit, 4 unit, 5 to 8 unit, 2 to 8 unit, 9 to 100 units. We actually do have commercial DSCR options, taking it all the way to 100 units with a more relaxed zip code and population density requirement. I'm not going to say that the requirement for our option is totally eliminated, but it is very flexible. So please do consider the mortgage calculator for all of your DSCR options.
Thank you, sir.
Thank you, Jose. All right. Well, appreciate everybody tuning in. As you can see, we're very passionate about the DSCR loan. We deal with a lot of investors who absolutely love the fact that there is no income needed to qualify. There is no job verification for this program. We're simply going based on the rent. As Jose has talked about, there's multiple ways that we can arrive at that amount of rent that we're considering, but we're going to go solely based off the rental income of the property. Now, if you would like more information or would like an actual quote for a DSCR for your exact scenario, visit us at themortgagecalculator.com. We can pair you up with one of our loan officers who is an expert in the DSCR loan programs. You can also send us an email, info@themortgagecalculator.com. We can get you in touch with one of our loan officers. We are licensed in 22 states with over 350 loan officers all around the country. And we can do these DSCR business purpose loans in almost every state. So visit us at themortgagecalculator.com so we can pair you up with one of our loan officer consultants. We do this show every single weekday. So again, it's going to be interesting on Monday to see what the rates look like when we come back. So definitely tune in to us Monday, 11 a.m. Eastern time. Thank you, Nick. Thank you, Jose. And we look forward to seeing everybody on Monday.
Thank you, everybody.
Take care, everyone.
Thank you, everyone.